Demand for rental housing continues to grow nationwide. What are some of the factors that have fueled this change?
In terms of the rental housing market and how housing has changed over time, we've really, as a country, become more of a nation of renters in the United States. If you look at historical data, in 2004, home ownership peaked around 69% of Americans own their home. As of the 2021 Federal Reserve data, 65.5% of Americans now own their home. So what are the factors that have led to that decline over the last 17, 18 years? And they're really multifactorial. The first one being supply. Single-family homes are not built to the rate that they were in the past. The second one is economic, and it's cost. So along with that supply, the average price of a home has gone up dramatically in almost every market in the United States. And there are fewer and fewer what we would call starter homes being built that first-time homeowners might buy because the cost of material and labor for the developers has gone up. So they're building bigger product naturally to get returns on their time. And the third reason is really a cultural reason. A lot of millennials and Gen Z like to be mobile. So having a rental lifestyle coincides really nicely with that because it's very hard to move when you own a home. Multifamily is the clear winner of this shift in demographics and supply and economics. As single family struggles a little bit, multifamily tends to pick those people up because everyone has to live somewhere. And if you're not going to live in a single family home that you own, oftentimes a 5 or more unit complex is the preferred choice for a lot of people. The multifamily demographics are very strong, especially in markets that have strong employment growth, strong population growth, and we really don't see that trend going away anytime soon.
The multifamily sector is unique in that it has the financial backing of the federal government via Fannie Mae and Freddie Mac. This protection has ensured multifamily is a perennially strong and safe asset class for investors.
Residential rental housing historically has been the most stable of all asset classes. And you can look back almost 50 years plus on the national average, and you're going to be hard pressed to find vacancy rates go above 10% in residential rental housing. And even during recessionary periods, unlike commercial, meaning office, retail, hospitality, where you're going to see significant spikes in vacancy rates during those recessionary periods, multifamily and residential rental housing has stayed extremely stable, and you're not going to see vacancy rates really push north of 10%, for the simple reason that everyone will always need a place to live.
The reasons why investors should look at investing in the multifamily manufactured housing space is for a lot of reasons. Number one is Fannie and Freddie provide a deep capital pool of lending, and the multifamily sector has been institutionalized since the 1990s. Also, multifamily provides a very diverse tenant profile. So when you think of an apartment complex that has over 100 units, you have over 100 users versus a grocery anchored shopping center that has one large user with maybe multiple small users. An office building, you might have 5 users, 12, or 1, same with the triple net lease real estate deal. So it provides more diversification and a safer asset class.
Capstone is a multifamily brokerage firm that maximizes the value of your real estate investments while positively contributing to the communities it serves nationwide.
Some of Capstone's service lines include multifamily, manufactured housing, land, equity, and structured finance. Our core values are check your ego at the door, driven self-starters, and embrace the chaos. Over our time, we have hired individuals that are truly ambitious entrepreneurs who want to win. They're very competitive, and that is essentially Capstone. But that has been a big reason for our success, is finding those people, which then in turn adds tremendous value to our clients.
Our relationship with Capstone really goes back now almost over a decade, and we hit it off just given the underlying culture and values that's been created at Capstone. And the driving force behind the growth in our partnership in various capacities over the years has really been the entrepreneurial spirit, which has been instilled into all of their teams throughout the country. It's been great for us to work with them in all capacities over the last 10 years now, and we look forward to working with them over the next 20 plus years.
Our vision is to continue to expand and invest in our team. Our number one priority is the people that work here. And then focus on the relationships with our clients. We have long-term relationships with investors and owners of multifamily assets. Some we've known for years. We've watched their kids grow up. We've watched them get married. We've celebrated their wins. We've cried over their losses. And that's very much the industry that we're in. We're in a long-term relationship industry. So even though we're going to do things like bring in new technology platforms and look to do new things, it's all to enhance a relationship. We're never going to replace the people side. First here, then secondly with our clients. That's the future of Capstone.
Be proactive with your investment strategies. Choose Capstone. Visit capstone-companies.com.